Certificate in Islamic Green and Sustainable Finance. Module 3. The Green, Islamic Finance, Impact Investing Program, GIFIP. Intended Learning Objectives. To enable the learn are to appreciate and understand the relationship between Islamic finance values, impact, investing, values and financing of green and sustainable projects and ventures. To learn about the Global Islamic Impact Investing Program, GIFIP, Islamic Finance, Impact Investing and SDGs. The other side of the coin of financing projects and ventures in accordance with Islamic Sharia principles is the raising of the funds, which is an investment. Islamic Sharia principles go much further than simply avoiding interest, riba, uncertainty in transactions, gharar, excessive speculation, maza, and in specifically prohibited activities like alcohol production, pork products. It goes into just production process which avoid exploitation, living wages, which are in sync with impact investing and ethical, social and governance, ESG, investing values and principles. Objectives and anticipated outcomes of the Global Islamic Finance Impact Investing Investment Program. (1) United Nations Development Programme, UNDP, and the Islamic Development Banks, IDB. Research and Training Arm, Islamic Research and Training Institute, IRTI, jointly commissioned a study. I for Impact, Blending Islamic Finance and Impact Investing for the Global Goals, in 2017. The study enunciates the parallels and concerted effort amongst Islamic finance and impact investing, hence building an empowering business case among the network of investing and finance for the SDGs. This gave birth to the Global Islamic Finance Impact Investing Program, GIFIP, which has established the Islamic Finance and Impact Investing Training Program to assist players in the Islamic finance niche to build their capabilities to take hold of SDG financing prospects. This platform was launched in Pakistan in August 2016 and is intended to be simulated in Muslim-majority nations and member nations of the Organization of Islamic Countries, OIC. 2. It is envisioned that, through this platform, the UNDP will approve the arrangement for Islamic commercial investment and finance to recommend qualifying Islamic Sharia-compliant investments that are in sync with the SDGs. This agreement would be affected by the Islamic Finance Council of the United Kingdom and Islamic Research and Training Institute, the training arm of Islamic Development Bank, and including the associates of the Sustainable Development Goals Impact Platform. This move would enable private sector players and Islamic financiers, Islamic investment managers, and investors to ascertain investable opportunities whilst benchmarking the factual influence of their involvement with the Sustainable Development Goals agenda outcomes.
3. Realize the hidden possibilities of Green Sukuk to finance Sustainable Development Goal projects and initiatives. The Global Islamic Finance Impact Investment Program rolled out a fresh set of Green Sukuk investor trainings to create an increased recognition of the model and the prospective impact in the renewable power sector with regard to Islamic investors. The Green Sukuk is a distinct illustration of Islamic Sharia created impact investing security, which shows how resources mobilized from Islamic Sharia conscious investors could be used towards renewable power projects. The world's debut Green Sukuk was listed in Malaysia to finance a solar power plant. In 2017, the United Nations Development Programme and the Government of Indonesia were partnering with the Ministry of Finance in Indonesia to advise on its issue of the debut 1.25 billion sovereign green sukuk.
3. Realize the hidden possibilities of green sukuk to finance sustainable development goal projects and initiatives. GIFIB rolled out a fresh set of green sukuk investor training to create an increased recognition of the mode, and the prospective impact in the renewable power sector with regard to Islamic investors. Green sukuk is a distinctive illustration of Islamic Sharia created impact investing security that shows how resources mobilized from Islamic Sharia conscious investors could be used towards renewable power projects. The world's debut green sukuk was listed in Malaysia to finance a solar power plant. In 2017, UNDP and the government of Indonesia were partnering with the Ministry of Finance in Indonesia to advise on its issue of their debut $1.25 billion sovereign green sukuk.
The circle on the screen shows us the three core legs on which the global Islamic finance investment program rests on, which is it aims for a financial impact, it aims for an environmental impact, and it aims for a social impact. The financial impact should be that it should be financially self-sustaining and not a drain on the finances of a nation or an organization. The environmental impact would be to ensure that the environment is not harmed. Actually, it should be enhancing the environment by making the world more greener. And the social impact is for housing projects, financial inclusion, etc. It should meet all these three goals to be really an Islamic impact investment program.
What is green Islamic finance? Green finance is defined using various ways. Lindenberg, 2014, described it as follows: environmental goods and services, such as water management, or protection of biodiversity and landscapes, prevention, minimization, and compensation of damages to the environment and to the climate, such as energy efficiency or dams, the financing of public policies, including operational costs, that encourage the implementation of environmental and environmental damage mitigation or adaptation projects and initiatives, for example. Feed-in tariffs for renewable energies, components of the financial system, that deals specifically with green investments, such as the Green Climate Fund, or financial instruments for green investments, for example green bonds, and structured green funds, including their specific legal, economic, and institutional framework conditions. Hohner, Kostler, Facchetta, and Gilbert, 2012, assert that green finance initiatives products and are projects that aim towards sustainable development. Green Islamic finance would mean all of the above, if they comply with Islamic values and principles. Islamic impact investing. The phrase Islamic impact investing provokes numerous reactions ranging from jubilation to misperception. Some say this is just misuse of the word Islamic to get funds from the petrodollar rich Gulf countries. As with the development of the more developed financial market for social responsible investing, SRI, which started around 25 years ago, Islamic Sharia-compliant impact investing phenomena is the newest frontline that exceeds the limitations of negative screening methodologies and actively seeks intent in investments that adhere to Islamic Sharia principles and which provides both positive returns financially and measurable impact on the social indicators, SIs. Islamic impact investments are defined as those Islamic Sharia-compliant investments made into collective investment funds like unit trust and mutual funds, corporates and private companies, national and sub-national government units, private-public partnership projects, which in their charter documents like investment policy statements, vision and strategy statements have the objective to generate social and environmental impact alongside a financial return. Impact investing. JP Morgan Chase looks a wider definition of impact investments in the traditional finance arena as impact investments are those investments intended to create a positive impact beyond financial return. As such, they require the active management and measurement of social indicators, SIs, and environmental impact indicators, As, in addition to financial risk and return rates. The Global Impact Investing Network, GIAN, additionally enlarges the features of impact investing in comprising the following. Intentionality. The intention of the financier is to produce social and environmental impact via the investment selection process, and the screening procedure is a critical constituent of impact investing. Return expectations of investments. Impact investments are projected to produce a positive financial return on the investment and, at least, a return of the principal amount invested. Range of asset classes. With tied return expectations, impact investments are expected to produce returns that vary from less than the market, concessionary term return, to risk-adjusted market rate returns. Impact measurement. A mark of impact investing is the obligation of the investor to the quantity and provide a statement on the environmental and social parameters achieved and the development of the underlying investments. Impact measures. Impact measurement assists in ensuring transparent and accountable systems and processes that are critical to notifying the stakeholders of the exercise of impact investing and structuring the investment. These would normally include reporting on key performance indicators related to the objective, like acreage covered with trees, reducing X units of carbon emissions in a given period. Tegenwerk, Getty, 2018. Performance indicators would be measures like percentage increase in wage earned, level of carbon emissions, ratio of energy generated from renewable sources compared to non-renewable sources. Each project will have its unique indicators based on its objectives. End of module.